Welcome everyone to the Kendall Report, where I share my 45 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. In tonight's video, we're going to go through this crazy volatility, talk about the things that aren't happening and things that are, and whether or not this is a bottom. Let's get into tonight's video. Welcome everyone. What a crazy markets that we're dealing with here, right? We traded down on the S&P down to 55.5 and then ripped off and took out last 2 weeks ago high at the mid 55 handle. So we're in 200 points. I haven't seen this type of volatility maybe ever. We'd have to go back to the days of the illness and I guess the best reason for everything is maybe FOMO, right? Maybe everybody's freaking out they're going to miss something. So I titled this video tonight is the bottom in? And that's really the big question. I still think what I've been talking about this week, we're still in this consolidation, trying to figure things out. We're far away from any type of solution. I tried to I keep watching what's going on, and the answer is nothing's going on. There's no deals. All you hear is there's 70 countries. Everybody wants to do a deal. Well, why aren't we doing deals? But market participants seem to be happy with this right now. They seem to be, okay, they're going to get a deal, and I'm sure they will. Like I've been saying, I'm kind of stuck on this thread for the last several days, but there's no material changes in what's going on. The one thing we can say, in spite of all of the rhetoric around the tariffs and everything else, the economics, as we look in the rearview mirror just 1 month back, everything really is continuing to act really well. What we had, I'm just looking here, durable goods orders came in plus 9.2. Maybe that's pre-buying ahead of the expected tariffs. Maybe that's what we're seeing. But when you look around, you're not seeing anything terrible in the markets right now. But what you are seeing is just this massive whipsawing. I think we took out even day before yesterday's low and then ripped around. It looked like we had a pretty negative day going, and it just completely about face. And I just like I said, I just don't see anything. There's no news coming out. There's nothing really happening. Alphabet came out. They're buying back shares, I believe. So they're cooking the books the best they can. Everybody's just trying to manipulate whatever the view is. And I don't know. Maybe it would be good to ask the question, if you guys would put it into the comments, as are you feeling the FOMO? Are you feeling like you're missing out? You got to run in. The stampede that came in today was pretty impressive, and it's trying to follow through a little bit. Right now we're at 55.32. The highs going back 2 Wednesdays ago, actually Thursday was 55.28. So we're trading right at those highs, and I talked about that last night. I thought that angle on that 21 was going to be able to hold. Everything switched around. I've already run the data sheet for the S&P, so we'll take a look at that in just a few minutes. But the realities are, once again, nothing's changed fundamentally, nothing at all. And if you really look at what we're doing, we've got we'll broaden it out. When I bring up the numbers, I have them in front of me. I'll define this a little bit better. But a 200 or 300 point range, which is ripping back and forth in there. And some great trades, by the way. Okay, that's fine. But as far as a trend goes, there's not a trend. We're really just chopping around. And in last night's video, I recall that I was talking about the potential of maybe running up towards as high as the 200-day moving average. We've got speaking of the S&P here, we're coming in. There's a 40-day moving average that's got a reasonable downward slope that could hold things. But, if these stampedes come in right now, they're defying everything. And I talked about the spike in the ppms, and all these things that happen are the distortions that happen from when you get into a volatility. And I told you back then it's going to take several weeks to digest this volatility here. So once again, just like last night, I haven't been able to garner anything that is telling me there's something going on. I did see, there seems to be, I call it like the book tour, right? You go around and you're going to different shows and talking about your new book that just came out. Well, that's what's happening here. Yeah, J.D. Vance is in India. You got, Scott Bissett in, in Europe in front of the IMF, and they're telling the story how we have to rebalance. They're talking about, Bretton Woods and all of that, which is fine. But it's like, I'm still back on Jerry Maguire. Show me the money. I need to see the money. And, when you start talking a big game and you're not showing up with the money, it's just one of those things, So let's set up tonight. I think I can get through stuff. Oh, before I get into too much, my plan is I think tomorrow I've got to figure this out, at 2:00 p.m., I'm going to do a live, and we're going to, I think it's time. I couldn't do anything last week, but let's come in and let's do a wave tech. It won't be a market related show, but we'll go into wave tech. We're going to build portfolios, talk about structure, those type of things. So make sure to check that out. I'm going to try to keep it to about an hour. I think last time I did it went 2 hours, way too long. No one has that time. So I appreciate that. But the point is that what I'll do is I want to start continuing to do stuff. It's a good time to do one because it's not quite a week away. And the way that we set up WaveTech, and I'll talk about this tomorrow, is you get prorated to the end of the month. There's no trial period because there was no way for us to set it up on this platform around, but it just prorates. So it's like $7 times whatever, 5 or 6 days, and then you can cancel if you don't want to go forward. But it might be after tomorrow. I'll bring that up. But if you have any interest in managing your portfolio, you might want to do that. Okay, so let's go ahead and let me just look and see while we're here if the servers have updated yet. And it looks like part of it has run. Let me double check one more thing, and we should be able to go and get into the database a little bit. Yeah, let's do it. It's a good time to start this show because the servers run and update everything. So here we go. Yeah, so we're looking at the database right now. We're now up to 30.14%. And, if you've been around the channel a little while, you'll know that the numbers to pay attention to and watch are 22 to 28, and above 28, the next number is 42. So we're getting some serious traction. We got quite a few, I think something like 4,000, 4,500 new buys starting from Monday, right? Monday was a down day, and we got 600 buys, and then we got some big tranches. I'm just looking at screen, we got about 1,200 plus new buys on the daily, only 81 sells, so we got huge bullish ratios. And in this little area, let me highlight where I'm looking at here, right here where it says bullish, 16.5, 14 to 1. So there's some big positive ratios here. So it would look like as we come into Friday, end of the week, that we're probably going to stay pretty biased to the upside. I'll go through the data sheets here in a minute on the S&P. And I think when I do that, I'll talk to you a little bit about a rabbit hole that I fell into last night that I'm really excited about as well. I wish there was a way that you didn't have to sleep, because I've got so much going on right now with projects that I want to finish. I don't want any sleep. But this is impressive turnaround here, folks. I know it's only 30%, but there's an illusion in a lot of things that you have to have greater than a 50% traction to get to be material, and I have something I've developed over the last several decades, and maybe somebody go, oh, that's already been around, but it's just from observing this database. Is I call it the 40% rule. That 42% number is material enough that there's enough plenty of stocks in there that are going to continue to put that foundation. I went on a little rant in the Substack the other day talking about what it takes to have a trend. It's not, you can claim that the Magnificent Seven was driving the big percentages, but you still need that foundation underneath the market. And what we're doing right now on a short-term level is building that foundation. I'm just going to flash over to the weekly right now, and the weekly's at 18.51. I suspect after this we're going to get a decent buying coming in here, possibly getting over 22%. This is the longer term database that is out there, and this is intermediate. So when we go back to the all stats page here, it tells you what the holding periods are, and a typical holding period on the intermediate is actually around 220 to 250 days, and those are trading days. So that's a year basically. So the intermediate models on average will hold their positions for about a year, and that's why when we get above 42%, if you go back and you've been around this channel for a long time, you'll know when we go back to October of 23, we started to get over that 42%. We got a lot of traction. We had a lull in 23 after the run up, then we got a little flat spot, then we came in year end, and October, November, we started to get a lot of traction. We came into January of 24, got a ton of traction, and I was telling you we'd probably rally into July to September, and we continued that on. Finally, we came into this year and we finally got basically a refresh action, or that correction. So I think the S&P was down about 21% when that happened. So the patterns they're setting up here are pretty typical. I think I made a comment. Like I said, I kind of conflate whether I say it here on YouTube, since I'm on every day again, and whether I'm writing about it in the Substack, is that you're just seeing this these patterns unfold that tell us what the sustainability of these trends are. And for the most part, this database is about trend following, not about moving averages, not about any of that stuff. It's about the probabilities. Once we get a buy, every stock, there's 14,703 stocks in this database. Every one of them has a probability map that is built, and it's updated every trade, and that goes on. So some of these stocks, our database goes back to 1980 or the first day of trading of these stocks. So what happens is we're tracking these big intermediate to longer term trends that are going on, and the probabilities of them continuing. So there's a probability map built in within the models themselves, and this is why it doesn't respond sometimes when we see a bit of a correction, maybe mid-cycle. And this is a good example of maybe when in 24, where we saw that mid-cycle, it kept holding right about 61%. No matter seeing what happened, it looked like the short-term database was literally dumping down to like 8%. Meanwhile, the intermediate just stayed. It was like somebody froze it at 61. I even had my IT guy make sure that the stats were updating properly, because I was like, why isn't this thing moving? and it was absolutely spot on. There was a rotation going on that just kind of stuck it right there at that 61% number. So we're a long ways from that. We're a long way from a sustainable rally. I still think, based on the database, even though we're at 30%, not 42. At 42, maybe the trend will be a little stronger, and we'll start to be able to forecast a little bit more. But for right now, we're still locked in this sideways choppy range here, and we're not about to get out of this anytime soon. That doesn't mean that the indexes can't rally and go up and down and all that, because this is a much bigger picture of looking at what's going on with the markets, because we're looking at 14,700 individual symbols. And those could be mutual funds, ETFs, and individual stocks, bond funds. Everything's kind of in the whole kitchen sink there. And so the bottom line is this rotation is likely to get a little stronger on the daily. Maybe we challenge 42. We'll see. We're going to know that probably next week. And when I go through the technicals here in a few minutes, you're going to see that, yeah, there's strength here, but is this it? I don't think that's been rendered just yet. So let's go ahead and move on. We'll go on to onto the S&P here, and this is basically what we're seeing. We saw this big decline into April, early April, and then we've got volatility. And I mentioned in last night's video when we brought up a lot of the weekly charts, is the weekly chart still has a fair amount of normalization to go on. So this is why I continue to argue. It's been 2 weeks since we got, let me put the cursor here where the spike is right here. That was 2 weeks ago, Wednesday. And what we're seeing here now is really that bar has defined the entire range, if you look at it. So the range that day was 48.71, 55.20. Yeah, 55.20. The next, and it wasn't until today, and the action today, we got above that 55.28 level. So it took 2 weeks just to re-challenge, and we saw volatility contract a bit. The one thing I would tell you, the order book is filled up. It's not like it was. When we go back to 2 weeks ago, there was absolutely no liquidity in the markets, meaning there was no, liquidity for me is the bid ask, not volume. When you start to see these erratic trading where we were seeing 50 and 75 handle moves up and down, that's not healthy. It's real easy if you're a day trader to get in trouble. And sometimes you can stick your head in the sand and it'll come back for you. But a lot of times, if it gets on a run like we've seen, especially on that Wednesday, you got wiped out hoping it's going to come back in when you got a bad trade on. And those are dangerous and wipes out a lot of folks. But finally, we've got this, we had a little mini downtrend in the market grid, which is the big orange lines on the outside of this. Now we've got an uptrend going. And, so the value right now, this is interesting, because one of the things that we were looking at on the forecast, like if you see these PPMs, these shaded out lines, that's Memorex. That's not real, right? So what that is the forecast of where things are likely to go to. So what so this is not where, this is what's expected to happen. So we're seeing momentum starting to flatten out. When we were looking at the PPMs if we went back even a week ago, we were not seeing the fact that they were going to be able to break above their first and second derivatives. The forecast was very, very flat. Well, that's changed and what's happened is the 10 and 21 moving averages have come in and converged, and now the 10 if you look at the last 3 days of just PPM1, I believe this was, let me just see if I can bring this up. This was 81, then it dropped to a minus, I think it was a minus 19, was that right? Yeah, and then now today here, we're at plus 4.42, which is trend mode. So I'll show you that is wrong. I didn't mean to put that up. Oh my God. There it is. Wow, that was bad. Didn't want that on screen. Okay, so that's disturbing. I should have closed that. Anyway, the projects here that what we're looking at is the 65 mix, and the reason why it's mixed is that the ppm 2-3 is all they're at minus 0.19 now, so these were steeply down yesterday, and ppm here's the 0.42, and what we're looking at, it's interesting because it's now still categorized as a oversold bounce right now, so it's still in that bounce from that standpoint. Let me look at some of the other. Yeah, the trades. I'm working on updating the trade section on the thing. I would tell you if you get the Substack, which is kendallreport.substack.com. Last night I changed the format a little bit. I just put the data sheets in there. Let me know how you guys feel about that, guys and gals feel about the just being in that. But there's nothing that jumps out off of this sheet that is screaming any type of buy. I will update this sheet when I do the Substack tonight, but that's pretty much where just telling us more of the same and confirming. So that 40-day moving average right now, let me get a value for you. 55.61, and we're looking at ppm 3 at 19, so it's vulnerable to be. We could easily get above that if we look at the market grid for tonight and into Friday. Got to change the colors on this market grid. Let's see here. 55.90, 55.57, 56.40 would be an extreme in this pattern. So that is, but we're seeing a flattening off, an acceleration coming in toward next week as we come into May, if you can believe that already. It's hard to believe that it's May. But anyway, the configuration here is reasonably positive, but I still think we're probably working on just to bring an Elliott type situation. This is an ABC correction. We are well over 10% off the lows right now on the S&P. So we've definitely seen a 50% retracement. This is where folks are going to get sucked in. Everything's okay. Let's go ahead in. What I'm going to be doing is just watching database, see if we can get above 42%. And see if we can get some further traction, gives us some more guidance. But right now, there's a pretty solid base being built at the moment. And it was another thing I was thinking about is, I talked about, it's still been a couple weeks. I still think I'm going to bring up the weekly chart while I'm talking about this. But the weekly chart still has this big, what I call the volatility, where you can see the outer orange lines are the extremes of the market grid. Those are still going to have to collapse in. And just looking, I'm glad I looked at this because the 10-week moving average right now has ppm1 has a value of 1.05. So this is a good catch here. So that is going to be, it's showing that we're going to trade through it. But I would suspect that next week we have a bit of a retracement coming into early next week, especially if we trade up early in the week. And I'm just looking at these numbers here. The 10 period moving average right now is 5606. So watch that number I just put out there. Look for, if we do continue to trade up, we're at what, 50, let me get some numbers here, 5534, so that's another 70 handles. But whether that probably is early on next week, we could easily get there today, Friday. And if that happens, and look for a rejection a little bit off of that number. I think that it'll be interesting to see when we get the update on the market grid. So I'm gonna draw in real quick what I think is going, what is likely to look like. So, market grid's probably going to start to, this is what we're probably going to look like over the next couple of weeks. All of these lines are going to start to converge in. I've drawn this in for you before. And whether these top lines come out here a little more, it gives us this big range to trade in. So the weekly ranges could be huge. If we look back 2 weeks ago where the volatility happened, that was a huge rebound in prices. But now what we're seeing is just pure volatility, and the markets are still trying to reconcile with what happened during this whole decline, actually. So if I just erase all this, we're still very little structure here. You got to move here. My argument is we probably get something like this, and then we probably get, there's potentially a big channel building, and maybe we don't ever get up here, right? We end up just kind of continuing to go down. I still have expectations. I don't think this party's over yet. I don't know what's going to happen with these tariffs and with the negotiations. I would feel a lot better right now if we had something, a deal. I don't care if it was with Zimbabwe that no one even knows exists, or some little country. Show me the money. Jerry Maguire, right? Is show me the money here, because I think that the markets and everybody on the planet, not just the U.S., needs to see some kind of deal come through. Once we start to see that, but even then, and that's why I'm trying to, hear me out, folks. I know somebody told me we're just, we're going straight up to new highs. 3 weeks from now, we're going to get double top. Then it's going to go down. Listen, that's a bet. Maybe, okay. Can I trade that? Am I going to put that kind of money at risk thinking that? I don't know. Maybe you guys can. If you put too much capital at risk, you end up out of business. I'm not interested in that trade. And I would suspect that a lot of bigger money is not interested in putting that trade in. So we're going to have to grind it out until we see some material fundamentals, which would be show us some transactions that say that you've got a new deal and you've renegotiated stuff. Be really nice if it was Japan or the EU or somebody fairly big. I think China's going to take a while, and that's going to be hanging over the market. So at some stage, the volatility, that's what I'm trying to point out here, is that there's massive probabilities of volatility in this market. And there's not like it just bottomed and we're going to go. I still think there's 3 to 5 more weeks. There's potential of getting above this 10-period moving average, and 5,800 is like a possibility, but not a very high possibility. And then, then down here, you're looking at, 52, even 51 handle. We went down, the lows here was what, 48, 47, 48.32. And if you recall, there was some Fibonacci targets down there. We went almost directly to that Fibonacci target. So stay cool. Don't get too excited about this. There's going to be trading opportunities, but this, maybe in hindsight, we look down the road and everybody's going, it was the low. That might be the case. Like I said, I want to see 42 on the short-term database. I want to ultimately see some serious move in the intermediate database to tell me there's really serious structure. You got a bunch of trades that are going to be held for a year or trends that have probabilities for a year. That's going to give you a lot more and projecting out going forward. Right now, I in this environment we're in right now, I think 2-3 weeks you might be able to trade off of that, but you're gonna get in trouble to get too far down the road. So enough on that. Same scenario. This is the weekly. This is the weekly NASDAQ. We're coming really close to that downward 10 here. See what the values are here. Yeah, it's saying we're going to continue to burn off, but we're still under one handle. I'm going to take you guys off screen for a second. I want to see possibly if I can find something. I think I know where it is, so bear with me a second, okay? I hate this. I thought I stuck it in a file. I could grab it real quick. But I'm not seeing it at the moment. Give me one more second here. Well, that's terrible because that... I'm sorry. We'll just go back to it. I thought I had put a file. One I wanted to show you was this angle of attack, the probabilities of this angle of attack. And this is actually the rabbit hole I fell down last night. I realized I could do some pretty deep learning and analysis of what's going on within these PPMs and these moving averages. And I've got all the rules set up for that process. And that's another thing I'm going to do on this channel at some stage. There'll be most likely produced videos, but I'm gonna show you folks how I'm using AI to do some research and how to set up trades and do some other things that are pretty useful. Some of this stuff is still in works, but at least I want to put it out there so others can maybe take off of what I've done and maybe build beyond that. Yeah, so I see Green Garden saying you want the charts. One of the problems with doing both is the limitations on Substack. That's why I was trying to do that. If you have the indicators, you don't need me to put those in there. I'll look at it tonight. I've been running out of memory. I've had to adjust things, and when I'm producing the Substack, it's fairly late. It's at the end of my day most of all the time. But yeah, Green Garden, I don't think you were around, but I'm doing a Wave Tech at 2 p.m. tomorrow. We're doing how to build portfolios. That's all I'm going to talk about. Try to keep it to an hour. Okay, I'm just looking at a couple of comments here. Okay, so let's but yeah, so I've got like way too many projects going right now. If you saw my project bin, it's pretty cluttered. But we're right here on this PPMs. If we look at projections for PPM 2 and 3 on an intermediate basis, this is a NASDAQ up here. There's a ton of resistance coming in, and we're likely to see a rejection. So it's kind of interesting if we just look at this from a bar chart viewpoint. I'm going to blow this way up. So and I'm going to get my tool up because this is a quick little lesson here, is that typically you'll see this big reversal bar right here. This is the reversal. Usually after a big bar like that, the next bar is an inside bar. I mean, this is such a classic bar chart pattern. I know a lot of folks use candles. I think candles, guess if you use them correctly. I've never done it. Steve Nissan was a good friend of mine. We worked at Merrill Lynch together. He wrote the first book on candlesticks back in the early 90s. He was working on a book. We were all in a research department at Merrill. But the bottom line is, you get this type of formation, and it would show up on a candle as well, as somebody would argue that. And then so far we got another outside bar working with a higher close. So typically out of this pattern, you'll get another reversal because it feels like it's done, but it's not. And that's what I think we could. And this is basically even what the red dot indicator is showing us. It's going sideways here. All we've seen happen right now. Let's take a look. We've got these closes. This is not going to work. Hang on one second. Let me clean this up. So we have this close here. We got a close here and a close here. And then you got these big spikes. These are the these big broad ranges are the ones that psychologically affect you the most, because you think, oh, they were way down here and they rallied back. But then if you did a close only chart, it just went a little sideways. So trick your mind sometimes. Whenever you're a discretionary trader, those big spikes and those rallies, they just stick in your head. And sometimes they mean a lot. You need to know they happen. But when you go to like a close only chart, can I do that pretty quick? I think maybe. Oh, I'm frozen here. All of a sudden, all these charts look different when you get the extremes out of here. Yeah, we'll do, let's do a line. So it looks nice and clean here. It looks pretty normal. You get the move down, you get a little ABC up. Now you can see the hidden structure, if you will. And we have a tool in a WaveTech toolbox that is the pattern recognition tool that will actually map that out pretty good as well. But I'm just going to share another thing here with you folks, is that what I try to do, like when the market closed today, I try not to look at it. All the analysis I'm doing is I viewed some charts, but I didn't write down notes or anything like that. I'm just doing this analysis. But you want to be able to clear your psychological part of your mind. And the only way to do that is to step out, like on tomorrow after the close. I'm not going to look at the charts until Sunday. I don't look at anything. Because you have I call it the essence of the previous day still in you. And that will cause you to make a whole lot of mistakes. If you can clean the slate, like I'm an old boomer, right? But that Etch-a-Sketch where you had the little drawing thing where you could do the knobs and you can get it clean. You want to get as clean a look as this stuff, still have context, but a clean look. And one of the ways is just to go to like that line chart that I just showed you. But if you can clear your head, come back into the next session, especially if you're a scalper day trader like I am, you want to be able to do those things. And so quick little pro tip there. But when we look at this, we got a nice clean. We've already had an ABC up, maybe, and this is a weekly. Let me put that back up because that was, you can see we had this move down. This is like a nice clean little, if you get rid of the spikes, all of a sudden it's a clean little move. Are we going to get, another retest of the low off of the 10? Theoretically, the 10 should be a pretty decent number, especially with the PPMs. Let me just bring those up. PPMs are still at 1.39. The probabilities for a close above the 10 for next week at the moment is less than 10%. So that's the thing. And I guess I'm still kind of in a little loop here, kind of teaching mode, but analysis as well. But you want to, one of the things that I'm doing right now, and I set up all the rules, is I'm putting in, a lot of folks are always asking, where's the trigger points for all of the PPMs and all that stuff? And I just went in deep dive last night. I had to stop because I still had to write the newsletter, but a deep dive on some of these metrics and writing up a pretty strict rule base that ultimately could be applied to a chart. Now, one of the things I'm working with, folks, and this will go to a video, is you can download a CSV file with all of the data going way back on the chart, and I'm setting up some prompts for Claude, and I'm using 3.7 Sonnet, and to actually do some deep analysis on some things. And preliminary is really come a long ways, because it's actually going back and doing some of the research that we did back in literally 1984 when we built these indicators, and then revisited in 1992 when I first started with TradeStation and being a solution provider for TradeStation, and then ultimately building our portfolio tools. A lot of these, I've got decades of history of thought on what we were doing, and there were things that I wanted answers for that I couldn't get to, right? And looks like I've got a path, at least for the research, to see if I can validate some of these things. So I'm looking at a whole nother next level kind of thought process, and it's all because AI can do a lot of deep learning, and I've got an associate that is doing some things with me that we're looking deep into the spreadsheet. Sorry to get on a side note, but this is exciting, because one of the things we are all sitting here in 2025, and you're hearing this from a 72-year-old man, but I'm telling you what, that's been a quant most of my life, and I'm telling you what we can do right now is absolutely spectacular, and you don't even have to, not to offend, you don't have to have a lot of this knowledge to be able to do it. And those are videos I'm looking forward to doing, because I'm hoping to start a movement on some of these thoughts that I have. So later in the series, we'll get into that. So let's go back to the charts. I've been rattling on for a while here on some sidebars. But it's just amazing when you take off the bars, and even if I went to, if I went to candles here, they do the same thing. And I'm a pattern recognition kind of guy, so I just like these patterns because they make sense to me. And anyway, I'm done. All right, let's move on. Let's do, since we're at 15 minutes to go. I don't think there's, I just brought up the treasuries here. We're kind of sticking with the weekly. And like I said, we've got the same scenario going on with all of the markets. It's not some. What has happened in the last 2 weeks is what I call just a shock wave hits the market. The best way to do it is to look at it a half pipe. So volatility gets kicked up, and it's like a half pipe. You put the ball and it loses, it normalizes, so it starts to get at the bottom again. And if there's another shock or another reversal, then it gets reset. And what we're seeing is each time it gets reset, the volatility is gradually contracting. And that's what's happening from the standpoint of all of these charts, whether doesn't matter if it's index, equities coming into treasuries here, they all have been disrupted, or shock wave has hit them. And I lived in the Bay Area in California for years, and You get an earthquake, what do you get? You get the aftershocks. It's the same thing here. There are echoes of that, and we're seeing echoes all through the markets right now. And that's where, like I said, you have to be very careful with this volatility, especially if you're a short-term trader. You get something right, sometimes they won't let you out. I can tell you, I had a trade on the other day they let me out of. I stayed a little too long and I got bailed, but you can't count on those. And you have to have a plan A, B, and C. So let's go ahead and so Treasuries still in that consolidation. Let's do that since I've been going on about it. But look at Treasuries now without the. Let me see if I can turn off the. If I can see it. Look at Treasuries. They don't even look that exciting. Kind of went up and now they're just stabilized, and there's nothing there, right? So you put the market grid on, and then you go back to the bars, and all of a sudden you start to see all that stuff. So try what I call tricking yourself into looking at the markets from a different angle once in a while. See here if there's any. Yeah, thanks, Green Garden. Yeah, I listen, folks. I'm so intrigued by what I'm seeing and some of the work I'm doing. It would be nice to kind of be in a collaborative type situation as well. So I'll probably try to figure out how to do that. Whether it's we'll talk about that later. But anyway, you can see, like I said, if you can take some of the noise, so these bars, candles, maybe it's noise, you think you can figure out when the noise gets too loud, you got to turn the volume down. And the best way to do that is this little button right here. Go to a line graph. All of a sudden it doesn't feel so chaotic, right? But we can see all the indicators are starting to flatten, no big increases. That same volatility bubble exists here as other places. So let's go over and let's move on. Let's see what time we got here, 13 minutes. I think I can buzz through this. Let's look at the Dower real quick. And Dower is trying to put in, this is a weekly chart again, trying to put in a low, but check this out. We're gonna lower the noise here. Let me bring that up a bit. All of a sudden, the Dower looks like this little roll here, and you can see the. So if you're using these red dot indicators, you have the weight thick indicators. The number you want to look at is that next bar is kind of the projection for the next day. So one out, it's going to be about the same value of the 1 day, but the 1 day out is what you're looking at. But let me turn this off real quick. You know, it looks kind of flows up here on a close up here. Now we're coming down. I still think we got the Dower heading for probably 90. So if I'm right about the Dower, there's a couple things that I've talked about tonight. If I'm right about what's going on here, is there's going to be I think it was a video on Tuesday night. I kind of went through and connected all the dots and flowed through the equities to the interest rates, all this stuff, and how everything was pretty interlocked together, and how the outcome was going to be there. The fact that we've traded higher in this pattern, we're still within the bounds of all of this larger noise on the intermediate level. So it's very, very difficult for most people to keep some sort of perspective. You have to realize I started off the channel talking about my 45 years. I started in 1979. So it's working on 46 in September, right? That's a lot of years. I've seen a lot of stuff, throughout the years. I started when interest rates were on their way to 25%. And, and I was a bond trader. So it was a interesting time to come in. But my point is, after all these years, it's some of the things that I've shared tonight is trying to eliminate the noise, stepping away from the market sometimes. I can tell you on a trading floor in San Francisco, I used to work on a Pacific Options Exchange, and the clearing firm I was with, we had, if you were getting killed in the markets, you could go upstairs. We had a room with coinless video machines like Galaga and Space Invaders, and there were a couple others in there. We had pool tables, we had ping pong tables, we had chess tables, we had, just a way to step back. And that was one of the things I learned from there was like, we had a putting green inside one of the rooms. So just know this is one of the things that we don't all do. You get so immersed, and especially if you're having a bad streak, you gotta step back. And even boxers get that 2-minute break between rounds, right? So, but Dow, I think, is still, this is weekly. It may bottom short term. We still have the flows that are coming in here are going to probably push the Dow much longer. And and like I said, you got a bunch of talking heads running around. They're sending everybody. The administration, sending everybody out right now. You got Vance I mentioned this earlier. Vance in India. President in IMF. He's in Europe, and they're messaging, telling about the new book they got come out, which is Rebalance the U.S. Economy and Rebalance Trade. Meanwhile, they're saying lots of countries are calling, but like I said, Jerry Maguire time, show me the money. I need to get a little clip and play that. But that's what it's all about. So we are 8 minutes out. Let's go to, let's do gold. Let's go to daily, because daily gold, I told you folks a couple of days ago that anytime you see anything that looks like a 10-day moving average hit, you got to buy it. So yesterday's action, we traded just below it, and the thing screamed up. We haven't got there. What we're seeing, let me bring up the indicators daily. So indicators are peaking out. So we're now that trade is probably over for now. You might be able to get off one more day if it did drift down there today to that level would be potentially a good place to be. But for the most part, that momentum is already flatlining, so you don't have that bounce capabilities that you have. But throughout this, you can see as this PPM1 was expanding up, every bounce off of that, if it got on that 10, you could trade off that 10 right after the breakout, and then you got the big surge up into the fib targets, and now you come back, and now you can play the bounce off of the 10 again. So just make sure you pay attention to that. But I think that 10 bounce trade might be done. Ultimately, I think we go sideways. You can see the red dots are, I'll bring that up, slightly higher to sideways, trying to form along this 10-day moving average. So that's pretty much locked in. So we'll do Bitcoin. I didn't get to Bitcoin the other night. So Bitcoin 2 days ago got a RTX sell signal. So you're new to the channel, what the heck is that? That is when these this orange line that you see here on this page, what those are volatility markers. It's projecting what the extreme range is likely to be on any given day. And so you see, even though, let me tighten this up a little bit, even though we went up, we hit that fib target 3. This goes back to the 13th of April. We got these price targets for Bitcoin. We traded right into it. Excuse me. We got the bubble trade going. When you close outside of that orange line, which if you look at these charts, it doesn't happen very often. In fact, it's about 12% of the time. So if you have 100 bars, it's going to happen 12 times. So it's pretty impactful when it does happen. If it closes like this case, the RTX is not as solid as a signal as the STX, which is the lower end trade. But once you get that, you get 1 to 2 days sideways, and depending on what comes out of that pattern, and if we start to see here, we're at peak momentum on Bitcoin right now, so there's still some residual, there's still some pretty solid underlying trend there. So it's going to take a few more days, possibly going through the weekend. We come into early next week or Sunday or whatever, then we might get a bit of a rollover, at least into the moving averages. It's a pretty solid trend though. And I'll just bring up the weekly real quick, and and I'll come back up for some final comments. So I've been talking about this pattern for a while here. But we were able to get actually above the 21-week moving average. If you've been reading my Substack, kendallreport.substack.com, $8 a month, free 7-day trial if you want it to check it out. But this upward slope here, I had been talking about going back into March as a weekly chart, that we should stay above that rising 40. And we should, the top end should have been the 10-week moving average value, which basically is where we went to here on March, at the final week of March. We pulled back in, but there was only one close there in that period of time that we were below that level. And there's a pivot point down here that was at, I think 74.8, and the big number down here, these green dots, this was a drop dead. If we take that out, you literally would see a huge decline. We did not. We got down to 74.4. That was right into that support level. There was a fib marker right in here as well. Just see if I can see that. I can't. But anyway, this pattern. Now we have the 10 being forecasted. Let's take a look. See, the ppm is starting to turn up. This is a weekly Bitcoin. So what we're looking at here is probably a continuation of a move up. So this part, this consolidation or distribution we've been seeing. See, do I have time? So this distribution right here, this breakout out of this pattern. So we got kind of this zigzag formation out of here right into a big support line. Now we're getting kind of an ABC up. The key will be right around the $100,000 mark. That's going to be your right in that range here. If we can get above that, then you're going to retest these highs up here and maybe get a swing objective. And right now there's no new fib targets. And I'll just point these out, like over here, these targets came in back in July, and basically we came right into this target right in this range here. And even though they stopped calculating, and it's what I call an island, a lot of time these islands will come in later in the pattern. Okay. So I'll just come back up for a final. Thanks everybody for showing up as always. This will be the final broadcast I am doing 2 p.m. on Friday. We're going to build some portfolios and look at some ideas on how to come up with some portfolio ideas to deal with this sideways motion. And if we get above 42% daily, we're going to definitely want to start looking at some configuration. And in spite of my predictions and all of that, talking about potential recessions in Q3 and all that, these databases mean a lot more to me than some of the things I'm looking at. Because what we've already seen, by the way, is that how fast markets recover now. And one of the phenomena that I've talked about a lot is the amount of participants that are out there today versus back. When I started in the markets in 1979, a big day on the New York Stock Exchange was 40 million shares. That would break the system at 40 million shares, right? So, now we're trading billions of shares. We have the amount of participants because of the digital formats and everything we have are so huge. It's just like a lot of folks. So these trends and some of the transition, the thing that I've seen is a time compression on how long it takes things to normalize again. As you have, if you've ever done any data analysis, when you get into a lot of data points and you have a lot of outside random participants like we have, so we have, that's why we see how fast things change and the consolidations and the setups happen way, way faster. It's like on 1.5, maybe 2 speed. So anyway, folks, this is it for the week. I'll see you on Sunday night, and don't forget tomorrow the Wave Tech meeting. So make sure you hit this like button, subscribe, all that. Been picking up quite a few subscribers. Appreciate it. If you're new, subscribe. It's free. It does help the channel a lot. I'm trying to really rebuild the channel. I was offline for a better part of about 3 months. So I'm back. All right, folks. Take care. Have a great evening and great weekend. Yeah, I know there's a huge echo, but Pamela, go on to Discord if you have a question. I just loaded it up. I'm in the live chat room.